This strategy literally pays you to buy stocks that you already want to own and at a discount. Let me explain what the wheel strategy is. You can see it on the screen here, but I'm going to explain what it is through this diagram that I drew. So the first thing I'm going to do in the wheel strategy is I'm going to sell a put option. Now, if this stock is $100 and I'm okay with owning it at 90, I could sell the put option right here, because right here is 90, right here is 100, and then 2 weeks later when that option expires, the stock is $85, so I get assigned right here, right? Then I do the exact same thing on the call side to get out. So I sell a put option, right? I sell the $90 put, I get assigned because the stock's 85 2 weeks later. Then I own 100 shares because I'm assigned, right? Then I sell a call option to get out and do the same thing. Now, if I did not get assigned, I simply have collected the money and I do nothing. It's very simple. I sell the put option. Oh, I don't get assigned. Sell another put option. Oh, I don't get assigned. Sell another put option. Oh, I did get assigned. Okay, now sell a call option. Oh, I didn't get assigned. Sell another call option. Oh, I didn't get assigned. Sell. You see, then you do the wheel. You do the wheel. It's super easy. If you do this on blue chip companies, you're never going to lose. The reason this strategy is so good and that you cannot lose is because good stocks always go up. So as long as you follow the rules and you only do this on blue chip or high quality companies, you're always going to win. Now, if you have a super large portfolio, this is a really good strategy. If you have a medium portfolio, it's a great strategy. Now, if you have a smaller portfolio, you can still do this strategy greatly on things like leveraged ETFs, even with a few hundred or a few $1,000s. I have a video that explains how I use leveraged ETFs to take an investor's-like approach in a long-term trade, and I use the wheel strategy to amplify its returns, and I use the wheel strategy to better exit and enter my position. Here's SoFi. This is a banking company that I use this strategy on to both enter and exit my position. This is the all-time chart of SoFi, by the way. This is the accumulation area in which I was doing the strategy the most to make money during any market condition. I was making money like a bull run, but in a consolidated phase. How? Because I'm consistently getting assigned. If I wasn't getting assigned, I'm simply collecting the money. It's very simple. You can only lose with this strategy if the stock never recovers. So how do you get a stock that's never going to fall? You do it on things like SPY, blue chip tickers, and high quality companies. That's why I say you cannot lose if you follow the rules correctly. Now, to do it on something like SoFi that's a little bit less established, it requires some experience and speculation. That's something that's a different conversation that I'm not going to really talk about. But this strategy is an incredible method that allows you to buy stocks for cheaper, collect rent all the time, make money under any condition, and have room to be wrong when you're speculating. Selling options is already incredibly overpowered, selling calls and selling puts. But the wheel strategy allows you to combine it in a way to where you don't miss the move and then you don't have to be correct on timing. You know, it's great. Here's me without standing in front of the whiteboard. If you learned something from this video, please subscribe and like. Thank you.